Good morning, y'all. Happy Monday. I hope y'all had a good weekend. This market is just pretty wild. So taking a look here at the futures, the SPY is up almost 4.5% because, hey, why the hell not? And the Qs are only up about 0.5%. So you got the tale of two stories here. The futures of the Qs at one point were pretty much at the previous all-time high, really kind of giving it up here as we're about an hour and a half away from the open. So there's a little bit of funkiness going on there in technology, but as far as the market itself, looking at the futures here for the SPY, and we're off to the races. So S&P 500 this morning, guys, trading at an all-time high, assuming this holds up here for the next hour or so into the open. And, right now, guys, I'll be honest, you don't need to kind of, know what to do in every market environment. Things are really all over the place right now. You got all these weekly squeezes. My mindset was, and this is the thing, is that you can have an opinion on the market, you can have a gist of what you expect to happen, but you also have to have the understanding that the market's going to do whatever the hell that it wants to do. So, I've kind of been under the impression, or at least my mindset is, I kind of saw us just chopping back and forth inside these weekly squeezes for the remainder of the year. Now, maybe that still happens, but as we head into this morning's session, it does look like the SPY has different things in mind. So, maybe this weekly squeeze does fire off here. Maybe we do get some crazy momentum into the end of the year. Maybe this is kind of the end of the party. So, all these questions right now, guys, and what we want to do is just have the willingness to be patient. The willingness to be patient and stay out of harm's way, and the willingness to be patient waiting for a high probability entry. Now, as far as high probability entries goes, do I want to jump into the market this morning to the upside? Absolutely not. Now, I understand that we can continue to rally here, but I've never had much success, and I don't think you got a good shot at making, a consistent living as a trader going along a stock or going along the market after it's made a 2 to 3 to 4 ATR move away from the 21. So as a swing trader, right, taking those entries near the 21, it makes life so much easier. As we get these big pushes, you're locking your profits into strength. Now, we're going to see markets where we've made a big push away from the 21, and if you keep chasing, you might be rewarded. But probabilities are probabilities. And in my experience, the probabilities of getting the good risk reward, of getting a high probability entry after we've completely ran away like this, really ain't worth the risk. So my mindset here today is, guys, be patient, not so much looking to rush into this thing, not looking to call a top, but I'm an option seller. And any time that the market is pumping either which way, you're getting those inflated premiums on whatever side it may be. So as we're pumping up here this morning, after we've been pumping for the last 5 or 6 days here, these out the money calls are just getting nutty. So you think about this week's calls, next week calls that expire at the end of November. This might be a great opportunity to sell some deep out the money call credit spreads. But the thing to keep in mind, when it comes to selling call credit spreads, is that you're looking for exhaustion of that move to the upside. So yes, we're extended. If you're going to use the old rule of thumb, 2 to 3 ATRs away from the 21, yada, yada. But the thing to keep in mind, guys, is that we can go from extended to really freaking extended when we're firing a weekly squeeze. So that is the reality right now. Yeah, we're extended. Maybe the move to the upside doesn't make much sense. We know the market doesn't have to make any damn sense. But we are potentially firing a weekly squeeze here. So this is that moment in time where, while the daily charts can be extended, if we're going to release all this energy from the weekly chart, we could get even more extended. So my focus this morning, guys, is not going to blindly jump into a call credit spread. Though that's what I would like to do here, I'm going to wait for signs of exhaustion. So I'm going to be looking at a 4-hour chart using the TTM squeeze indicator. And what I'm looking for here on the histogram is for the light blue bars to turn to dark blue. That's your potential heads up that the big pump here to the upside might be coming to an end. So take a look at this, right? This is what I'm looking for. Not blindly jumping in, waiting for signs of exhaustion. We're releasing energy. We're just banging here on momentum. Once that momentum gets exhausted, you got a small window of opportunity to sell somebody else those deep out the money calls. And if the market just simply slows down, the implied volatility crush that those calls go through puts a lot of quick profit into your pocket. So I don't want to jump in front of a train here. Rather, yeah, we're extended. We can keep going. We can roll over. Who the hell knows? But I'm going to try to put the probabilities in my favor by waiting for signs of exhaustion. So I'm really going to focus on the 4-hour chart, the 2-hour chart, and the 1-hour chart, just looking for the exhaustion here, that bullish momentum. then maybe you got an opportunity to come in there and sell a call credit spread. But I do advise you guys, be patient today. Have the willingness to do nothing. Don't have the FOMO. And again, think about probabilities. The market might keep on going here. It might keep going today. It may keep going all damn week. But you got to think about probabilities. And as far as, making a consistent living as a trader, I don't think you can accomplish that taking entries on, stocks on the index when we're already extended. Maybe we keep on going. Maybe you jump in here today and you just get kicked in the teeth with a nice flush back to the 21. So all things to consider, guys. But as far as, catching a top, catching a bottom, it's all about exhaustion of that momentum. As we're looking to sell put credit spreads, looking for the selling pressure to come to an end, we're looking for the exhaustion of the selling pressure. As we're looking to sell call credit spreads, looking for the move to the upside to be over, we're looking for signs of exhaustion of that bullish momentum. So don't blindly jump into this move, long or short. Put the probabilities in your favor, wait for a little bit of confirmation, and then you go from there. So I'm going to be very aggressive this week as far as uploading videos. I think there's a lot to cover and a lot I want to discuss with you guys. So keep an eye on the channel here tonight. I'm going to post up a full recap of today's sessions, any trades I take, etc. But that's my thoughts this morning, guys. Are we extended? You bet your ass. Can the market continue to go? You better believe it. The move isn't over until the move is over. And it's all about momentum and it's all about exhaustion. So I'll see you guys tonight. Looking forward to getting some content your way. Best of luck, y'all. Talk to you soon.